Philippe, Vincent, come and join me for the second part, and so we will talk about the result of the survey I've mentioned, where we had different questions about the reform, about the trends in investments. So please, let's go through first Pictet, your products, but also the, let's say, the result of the survey.
Absolutely, thank you, François. Let's see if, okay. Thank you, let me take this. Well, first of all, thank you very much for giving us the opportunity to be here at the Atel. As always, it's a pleasure to be here. So, yeah, before we start, I wanted to maybe speak a little bit about Pictet, just to make sure. I'm not sure if everybody knows well who Pictet is here. So maybe we have a quick introduction on the company. So Pictet is a very well established Swiss bank, which was created in 1805, so more than 200 years ago in Switzerland. We have more than 600 billion euros of assets under management. More than 5,000 employees and present in 30 offices in 19 countries. So the headquarters is in Geneva, but of course London is quite important as well, and Luxembourg. Yeah, thank you. Luxembourg as well, by the way, very close to here. We have quite a big office here as well. We are quite proud about our credit rating because we are AA2 with Moody's and AA- with Fitch, which is, I think, one of the best rated banks in the world. So we are divided in 4 different businesses. The 2 big ones are asset management. So this is the one we are part of with Philippe and myself. We have more than 200 billion euros under management, including more than 40 billions in money market funds, and the money market funds section has grown a lot this year. We have also wealth management, obviously, with also more than 200 billions of assets under management, and the 2 other parts are alternative investments and asset services. So now let's talk about the Atel Treasury Survey. So there was a questionnaire sent to all the corporate treasurers in Luxembourg. And so thanks very much to the ones who answered. We have analyzed the results and produced 2 slides to discuss about this survey. So first of all, we noticed that obviously the main currencies in Luxembourg are euro first, and then dollars. These are the 2 biggest currencies that corporates have in Luxembourg. In terms of the products they use, I mean, the top 3 are short-term bank deposits, less than 3 months, money market funds, and also cash left on the account. So this one is a little bit more surprising to me. I think it's probably related to the fact that the rates were negative not so long time ago. So I guess at that time it was good to have the cash on the account. Maybe now it's time to potentially move this into products which have a higher yields, I would say. So we're going to probably see this change soon, especially with the rate hikes, including today, 50 basis points with the ECB. In terms of the criteria for the cash investments, what the questionnaire shows is, so here I speak about cash investments in general, not just money market funds, is that the top 3 criteria is not very surprising, are the size and the quality of the counterparty, access to liquidity, and risk diversification. So this comes on the top of the maximization of the yield, which is the 4th criteria. I think it makes sense because, you know, when we speak about short-term cash for corporates, it's not surprising that the key criteria is really capital preservation and access to liquidity. So now I'm going to ask Philip, maybe you should present yourself as well. I didn't give you the time to do it. Oops.
Yes. Good evening. I'm Philippe Billot, Head of Money Market at Pictet Asset Management. And I'm going to present you the results of the survey that are regarding the money market funds. So there was a whole section of questions regarding the use and the criteria for selecting money market funds. And the first questions that was asked was, which criteria do you use to select a money market fund? And the first criteria is the existence of an external fund rating. So typically we have ratings from Moody's, Fitch, or S&P. The second one was the settlement cycle, so T0, T+1, T+2. The third one, the fund size. Then the fourth one, sponsor rating. And the fifth one was fund manager's experience. Actually, those criteria for us and the answers are not surprising. It's quite professional, I must say. And if we consider the consultants that we work with, they would consider exactly the same type of criteria when selecting a money market fund. There is something that is more surprising and related to the previous presentation. There was a question about ESG. Do you use ESG criteria for selecting a money market funds? And then the answer was yes for half of the panel and no for half of the panel. So here, for ESG, there is no clear consensus. And at least it's not one of the main criteria used for selecting a money market fund. Then the second topic that we reviewed was the regulation. So as you know, money market funds are highly regulated. They have been regulated since 2011 by ESMA, and there's been a strong regulation put in place in 2019, but most of the funds were already compliant before that date. And this regulation is aimed at really make money market funds a very safe product for investors, and it covers all aspects of fund management. I think there are more than 100 pages of regulation and very, very detailed, even to the criteria that we have to use to assess credit quality of the asset we invest in. So very strong regulation. And then there's been a COVID crisis, and regulators have been a little bit worried about liquidity. And in the questionnaire, we asked, were you worried about liquidity? And 1/3 of the treasurers confirmed that they were concerned about the liquidity during COVID crisis. And as a consequence, the regulators are reviewing the regulation with a view of strengthening the liquidity patterns of money market funds. So what we asked, what was the questionnaire asked was, are you aware of this review? And 50% said no. The risk which is embedded of this review is not very positive if we look at it, because treasurer thinks that as a consequence there might be an over-concentration of sponsors, maybe lower yield of products, and at the end less choice for investors. And unsurprisingly, the majority of treasurers think that there is no need for a reform. At the end, there is not a clear preference either for LVNAV or VNAV, the two categories of money market funds. So I think that with this result, there is a need of education, I think, from the regulator for the investors on what they want to do, actually.
Okay, so now let's go back to the cash solutions and let's analyze them a little bit more in detail. First of all, I wanted to clarify that within corporates, usually there are three types of cash. There is the operating cash, which is really the short-term cash that needs to stay available all the time. So, of course, it needs to be invested in short-term solutions, potentially like money market funds, deposits, maybe repos, but stay very short. Then there is a second part, which is the stable cash. This one can potentially be invested a bit longer. Usually we can see up to 12 months. Well, of course, it depends on how stable the corporate knows the cash is. And then the third part is the strategic cash, which is the cash staying for long term, and then you can go a bit for more longer term solutions, potentially with a higher yield. So I just wanted to clarify this because today we only speak about operating cash solutions, really short term. And so we did like a small table to try to make it a bit easier to understand what are the pros and cons of the products. Maybe Philippe, you can go through them.
Yes, and we selected the 3 products that have been identified as the main investment vehicles for treasurers for cash. So direct investment, so in this we include treasury bills, commercial papers, certificates of deposits. So probably big treasuries can afford to have a direct investment, but not only. Then bank deposits, be overnight, term next, or a bit longer. And finally, money market funds. And the first criteria that we reviewed is diversification. And usually, if we consider diversification, money market funds typically hold more than 50 to 100 different positions, and they are highly diversified. Versus bank deposits, where usually, Vincent mentioned the case of cash that is staying just on the bank account, so there's no diversification. Money market offers this diversification. Then in terms of liquidity, the liquidity for money market funds is immediate and obvious. You just need to pass your order. As for direct investment, it's a bit more questionable because, of course, if you have treasury bills, it's highly liquid. If you have CDs and CPs, it's liquid as well, but you need to work a little bit to have a bid on your assets. And bank deposits, liquidity typically depends on your good relation with your bank.
Thank you. And maybe let me take the operational criteria. So we think money market funds are really a good tool for the operational reasons. First of all, it's very easy to set up. You can use usually online platforms. There are quite many of them. And then you can see, if you're on the platform, different funds there, you can compare them, and you can easily invest, increase or decrease your investments. But the other point I would say very important as well, especially compared to maybe deposits, is that if you have cash, you can just invest in the fund, leave it there, almost forget about it if you don't need it. And as soon as you need it, you can just get out of the fund partially or fully and get the cash back in the 24 hours. So compared to a deposit where you have to roll over every time, it's quite time consuming. You need to make sure you don't forget there is a maturity coming, then call the banks and get rates and then roll over, etc. Here you can just leave the cash in the fund, which is I think much easier.
Then more controversial topic, which is the net return. And the net return of direct investments and money market funds are closely related to the money market levels. And then also the type of asset and risk, counterparty risk that you accept to take. Obviously, you are more rewarded in terms of return when you invest in a lower rated issuer. But what we can say is that with direct investment and money market funds, you will have returns that are closely related to the level of the market. As for bank deposits, we have put 2+ only because we noted that the bank are a bit reluctant at the moment to pass through completely the rate hikes that have taken place this year, so a little bit less favorable. Then, as for counterparty risk, there is one feature that we need to stress about money market funds, is that if we want to operate a money market fund, we need to have credit analysts. And in Patrick's presentation, we see that they have tens of credit analysts, including ESG. And actually, in all the fund management firms, we have a lot of credit analysts dedicated for money market funds, analyzes the risk. So counterparty risk is mitigated in a money market fund. In terms of sensitivity to rate hikes, as Vincent mentioned, if you invest in a money market fund, you forget about it, and if there are rate hikes, given the low duration feature of the product, you will benefit from the rate hikes. If you have invested in a long-term deposit and hikes are rising, then you can be caught in a negative trend. Then in terms of transparency, there is something that many people may ignore, is that we need to report the position of the funds so that you can have it, and in some instances like portals, on a constant basis about our position, so that you are aware exactly of what type of risk you take. If we compare that with bank deposits, for instance, banks usually do not display to you the quality or the details about their balance sheets. And by the way, it's important to note as well that money market funds are not leveraged, contrarily to banks. Then if we go into more details about money market funds, so you see on this slide the main features of a money market fund. So I already mentioned diversification and regulation, but what is important here to note the type of assets we do invest in. So commercial paper, CDs, TBs, FRNs, deposits, short-term bonds. And here, what needs to be clarified is that money market funds do not have any currency risk or risk that are not related to money market risks. So you will not have equity or anything else. It's purely money market risks. If we broaden our view about the market, and we are in Luxembourg, so Luxembourg is a big marketplace for money market funds, along with France and Ireland, as for the domiciliations. And we have displayed here the latest statistic from CSSF regarding money market funds. And here what we can see is that globally it's a very big market, 400 billion at the end of last year. And there is a slight difference between currency. So if we take the example of euro, most of the funds are VNAV, whereas if we consider US denominated money market funds, most of them are staple NAV, be CNAV or LVNAV. And that raises the question of VNAV versus LVNAV. So in our view, VNAVs, they offer a lot of flexibility in terms of investment, because you do not need to do buy and hold strategies. At the same time, in terms of valuation, it's very transparent. What you buy is an asset that is valuated under current market conditions, contrarily to LVNAV. And then it's in the regulation, there is a possibility eventually that LVNAV will be thought to be converted into VNAV. And that has never been experienced in the market. And we think that if something like this happens, the fund will be badly hurt by redemptions. But there are some advantages also of LVNAVs, and many treasurers see the LVNAV more accounting friendly for their balance sheet. Then if we move more concretely in a money market fund, what can you find in a euro money market fund? So the first thing that you can see on the top right and left is that those assets are highly diversified. So for instance, in terms of country, you see that the biggest exposure is Japan, and also part of it is treasury bills, and then the second one is France. In terms of sector, you see a predominance of financial, but this is completely inherent of the nature of money market, which is supplied mainly by banks and financial institutions. And also, we have to note that usually corporates, over the past few years, have been cash rich and less issuing in the market. So they are not that present in the portfolio. In terms of diversification and transparency, you see on the lower and left side of this chart the details of the maximum exposures of the portfolio. So you see that it's mainly composed of banks, highly rated, mainly AA, sometimes AAA like BNG, or treasury bills like Japan. In terms of instrument breakdown, it's massively invested in commercial paper and in CDs, so typical assets of the money market. Then in terms of structure, on the next slide, if I can change it. Okay, so on this slide, you see the duration of the funds. So you see it's very short duration. The Euro fund is 8 days of duration. The US dollar fund is 33 days of duration. And you see the yield also on the second column, 201 for the euro and 455 as of yesterday for the US dollar. And it's relatively consistent with the Esther and Fed funds level.
So that was based on yesterday. Of course, there was many central bank actions today, but yeah. Maybe just a point on the duration. So money market funds have with the regulation is maximum 60 days. So we can sort of choose between 1 to 60 days, I guess. And you can see that, for example, in euro we are only 8, so that's really, really short term. The main reason is that we want to benefit from the current environment where the rates are going up. But of course, it's up to the managers of the fund to decide to go a bit longer or shorter. But at the moment, we have decided to go very short so that we can benefit from the rate hikes all the time.
So to end up, a few criteria that should be considered when investing in a money market fund. I mentioned a few of them, but the category of the fund is important. Short-term funds or standard, VNAV or LVNAV or CNAV structure as well. Existence of an external rating is important as well. And also the ESG integration, Article 6 or 8. So thank you very much.
Thank you.
Thank you. So more than a question, maybe just a first remark, as we mentioned. So we have different positions. If you want to check on IMFA website, you can see their position paper and ours on EACT website. But as mentioned during the presentation of the survey, so we are against the reform because we do believe that there are some risk over concentration of players. If we remove the LVNAV, so we think that it could let's say, push a lot of investors to go to other products. And with swing price and additional, let's say, buffer or gateway, that could be a problem because the cost could increase, of course, the return for corporates at the moment where interest rates are picking up. And the last thing I want to mention, we should not forget that corporate treasurers are investing in money market fund, but we have also a lot of corporate issuing some papers, so we need to have investors to buy our short-term papers, and so we should not forget that. So what we explained to the EU Commission recently, that it's an important instrument to fuel and to help the economy. So any question for our speakers? So an element you've not mentioned, it's IS7, so cash equivalent is really important for a lot of us because we are under IFRS rules. And I like, and I fully agree with you, segmentation, but in practice, and I'm sure that some people have faced that, a lot of corporates consider that everything is operating and therefore short term. And also because of IS7, so it means that you are not really allowed to use other products than standard or very short-term products. I don't know your experience, but...
No, I mean, of course, it's indeed very important that the funds we offer are considered as cash equivalent, and because we know for corporates it's very, very important to be able to book this as cash.
And as you
pay attention to that,
as you rightly mentioned, so we can automate via platform money market fund, where deposit is still difficult to automate the investment in bank deposit, and furthermore, you need to call the bank, and it's difficult to call bank at the same time. It's more manual, and you concentrate your risk. And sorry, but these days we know that some banks could face some difficulties. I know a certain famous bank in Switzerland recently. So that's quite important to diversify.
No names, please.
Yeah, and not you. And in terms of returns, we also notice that when you call the bank on a daily basis for overnight rates, these rates are fluctuating depending on the needs and currencies. EU and Luxembourg dollar is usually well, let's say, quoted, but for euro, it could be fluctuating. So if you compare on the recent days, and of course taking into account the pickups in interest rate, usually your funds, Amundi, Pictet, and some others, could be more, let's say, performing compared to bank deposits. And easier to manage because once you invest it, it's compound.
So I think the point you mentioned there, which I mentioned before as well, but yeah, it's so much easier, I would say, because as you say, when you roll over the deposits, you have to call the banks. The rates can change quite quickly depending on the cash needs from the bank, depending on the timing as well, if it's end of the year, etc. So it's a lot of work, I would say, to do that compared to just leaving the cash in the.
An early redemption could end up with a penalty. So you lose the benefit of your deposit. So in order to respect the timing, I do propose to close this session, but in any case, Philippe and Vincent will stay around, so do not hesitate to raise questions. Veronica is there, and thank you for coming today, because she was visiting CSF, because we keep lobbying with the different stakeholders. So if you have any question about the reform, I'm sure that Veronica could give you a lot of insightful information.
Okay, and we have also 3 other colleagues there. So Jean, David, and Stephen. So yeah.
Any questions? Specialists are around.
Okay, happy to answer any questions after.
Thanks a lot.